Right, back to the audit report, yeah, audit opinion, audit report. Okay, the slide I'm showing to you now is actually the example of unmodified audit opinion. Yeah, but material uncertainty exists in relation to going concern. So, this is the opinion. Okay, the report. This is just the extract lah. The important part that I just like you to see. Okay, so this is the opinion. Then the basis for the opinion. And then this is the material uncertainty related to going concern. And this is the key audit matter. Yeah, so you can see here the key audit matters are those matters that in our professional judgment were of most significant in our audit of financial statement of the current period. This matter were addressed in the context of our audit of the financial statements as a whole and informing our opinion that on, and we do not provide a separate opinion on this matter. In addition to the matter described in the material uncertainty related to going concern section, we have determined the matter described below to be the key audit matters to be communicated in our audit in our report. So here, description of each of the audit matter, key audit matter. And remember just now what the auditor has to communicate. This one, right? Why the matter was determined to be one of the most significant, so that has been addressed just now, right? Can it has been addressed in the audit report. So it's related to this one here. In our professional judgment were of most significant in our audit, yeah. Because it said that in the context of our audit of the financial statement as a whole and informing opinion thereon. So this is what this is where the auditor mentioned that based on their professional judgment, yeah, going to be considered significant. All right. Now, with these key audit matters, you can see that the audit opinion is still unmodified audit opinion. It's not modified, It's not modified, it's just unmodified. The thing is that the auditor would only like to highlight. The auditor would like to highlight with regard to this material uncertainty related to the going concern. So here, auditor has actually determined about the going concern issue, right? So if you read here, we draw attention to note 6 in the financial statement. Note 6 is actually the financial statement. We know that has note number. So note number 6 contain about the going concern, yeah, which indicate that the company incurred a net loss 1 to 5,000 during the year ended blah blah blah. The company's current liability exceeded its total asset. So kalau company's liability exceeded total asset, what does that mean? Potential for going concern lah kan? Potential. The potential for not to be going concern. So that's why the title is material uncertainty related to going concern. Bermakna as auditor, if let's say I'm auditor, I perceive that the company cannot continue. Yeah, as auditor, I perceive that the company cannot continue. Why? Because the liability is greater than the asset. By how much? About 19,000, right? 19,000. So will the audit report be be modified? No, tak. Because the company's management has actually disclosed the information in the financial statement. So there is nothing wrong about about the financial statement. The financial statements have been prepared in a true and fair view manner. So that's why the auditor decided to give an unmodified audit opinion. Clear about that, yeah? But because of the issue of going concern, yeah, the company has recorded everything according to the standard, according to the generally accepted accounting standard, blah 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 blah. But the thing is, the company itself cannot. The auditor perceived that the company itself cannot continue because of the financial problem. So auditor would like to highlight this. Highlight to whom? To the user, but especially who is the user? The shareholders. Yeah? Because auditor is responsible to the shareholders. So that the shareholders can make decision. Yeah. So this is the information, and then this is the key audit method to highlight, to re-highlight here about the uh, issue with regard to going concern. Right. So that is example of in relation to how to report the key audit matters in the audit report. Yeah. Okay, now let's look at this. The ISA 700. ISA 700 is actually about auditor to form opinion. So it's nothing new to you here. Right. These are the types of audit report. I do not know during your time whether you use the term qualified and unqualified audit report. Did you use this term for your information? Yes or no?
Yes.
Yeah. For your information, we no longer use the term qualified and unqualified audit report. The term now is replaced with modified and unmodified. What does it mean by the term modified here? If you look at the standard ISA 700, they give you the example of the audit report. The I should say contohlah ya, contoh example of the audit report that the auditor can use. And this example is a situation where it's a clean audit report. So when we say clean audit report, the clients prepare the financial statements in a true and fair view. Okay? Prepare the financial statements in a true and fair view manner. So there's nothing wrong. Huh? Everything has been, prepared according to the standard companies have and so on. Now, so when the auditor adopted that, that means we say it's not modified audit report, not modified audit report. Not modified, we say unmodified. Yeah? Not modified is unmodified. Yeah? If the client, the management has actually, prepared the financial statement which the auditor didn't agree. So the auditor has to assess the degree of disagreement. The degree of disagreement will have to be reflected in the audit report. So it can be, Therefore, the auditor is going to use this unmodified audit report, but auditor is going to change the opinion. Yeah, change the opinion in the unmodified audit report. So when the auditor change the sentence of the unmodified audit report, that's why we say now the audit report has been modified. Yeah, clear everybody? I hope you are clear. Yeah. So the modified audit report. Remember modified audit report? That means the auditor has actually changed the audit report. Has changed the opinion actually, from the clean opinion now to an opinion where auditor has some reservation due to what? Due to the disagreement with the management based on the financial statements prepared by the management. So the disagreement here has to be determined how serious the agreements are. So the level of disagreement would be, serious or not serious. So if it is serious, it can be under adverse opinion. If it is not so serious, the level of disagreement is not so serious, then it's going to be qualified opinion. All right, yeah, everybody? Okay, what about the disclaimer here? Now, remember, auditor carry out the audit. Sometimes, the auditor would like to get this information, that information, but the auditor cannot get the information. Yeah? The auditor cannot get the information due to so many reasons. Let's say you want some information from me. You want the PowerPoint slide. I said, no, I cannot give you. Can you do anything? Yes or no? No, you cannot do anything because it's my right to give you the PowerPoint or not. Yeah, the PowerPoint slide or not. So the same with auditor. Auditor require the information from the management, blah blah blah. But it's just that the information is not available. Maybe simply because there are some confidential information, or maybe simply the auditor doesn't want to give, or maybe could be the information is not there. It has been destroyed. So as auditor, can you form some opinion about this audit segment? Can you form conclusion about the area that you wanted to determine? No, cannot, right? So that means the evidence is not sufficient, right? So you have to determine how the degree of the information not available. If a lot of information, there is not a lot of information are not available to you, can you form a conclusion? Can you form an audit opinion on the overall financial statement? The answer is no. You cannot form an opinion at all on the financial statements because there's a lot of loopholes that you cannot make some decision, simply because there is no evidence. So when we say disclaimer of opinion here, it means that the information are not available to you and you cannot make the conclusion for the overall financial statements. I hope you are clear about that, yeah? But on the lesser degree of seriousness or lesser degree to that, it could be that as auditor, you have obtained most of the evidence that you require. But maybe for certain audit item, the information is lacking. For instance, for instance, information related to inventory. When you join to become auditor, the company, the client has carried out the inventory take. And you were not, you were not there when they carried out the inventory take or the counting of the inventory. Because why? You were not hired as auditor yet during that time. So that means you have lost an important information there, important evidence. But because information regarding inventory is actually very important. Yeah? Many companies fail because many auditor has been implicated due to information regarding the inventory. There was a classic case, McKesson Robin. Yeah, this one sometimes some lecturers mention about this case when they talk about the legal liability. Some lecturers they didn't mention. Yeah, usually I used to mention about this McKesson Robin case when I talk about the legal liability, but they decided, the group decided that it's too much, for us to deliver to you. So we ignore that. So back to this McKesson Robin case, it's about the inventory, yeah, that the auditor had actually, just accept the information given by the management. So it turned out that, the auditor had been overstated. So back to this audit report here, if the auditors were not present during the inventory count, then this information may not be available to auditor, because for inventory, surely the auditor has to obtain on their own. It cannot rely on the management. Inventory is actually a very sensitive item because the possibility of overstating inventory, whereby would lead to overstating profit. Yeah. So profit overstated, inventory overstated, it means that overstating asset. Overstating asset, what happened just now? In the case of going concern, liability is more, asset is more than liability. But if the inventory has been overstated, it could be that liability is more than asset. And be careful about that. So if, let's say, back to this inventory just now, the auditor is not available, but auditor is confident that the information regarding inventory is okay, because why? Auditor can see that from the internal controls, yeah, internal controls related to inventory are in place, yeah, functioning properly. Management is concerned about the how the inventory is being handled, blah blah blah. So even though that the auditor, did not have evidence about inventory, but due to other corroborative evidence, the auditor is satisfied that inventory is high likely not to be misstated. Eh? In other words, high likely inventory is stated accurately and in a true and fair manner. Accurate means true. Okay, we like to ask students, what is the meaning of true? What is the meaning of fair? True, it means accurate, yeah? Fair, it means reasonable. Why? Because the items in the financial statements sometimes are made of estimation and some are accurate. For example, like asset figure, cost figure. Cost figure for asset. Is that accurate? Of course. Yeah. So that's why we say that true. What about depreciation? The net book value. Is it true? No, it's not true. It's fair. So you can imagine for one item, it can be, on one aspect true, in another aspect fair. So back to information regarding the evidence just now. So here you see that although auditor did not have such evidence, but the auditor would be, satisfied that the financial statements in general would be true and fair. So even though the evidence is not available, then the auditor can go for the qualified opinion. Qualified opinion due to lack of evidence with regard to inventory. So this qualified opinion is actually an opinion, a modified audit report, but with less serious concern to the auditor. To the auditor. So you can see that qualified opinion can be due to unavailability of evidence, but not so serious, and also could be that disagreement with the management. Now the disagreement here, masa dulu memang you belajar pasal disagreement kan, but the term we don't use agreement when the auditor reason out, they don't say disagreement. They say that because of the material misstatement. But the material misstatement, because when there's disagreement, the auditor feel that it's not correct. So when not correct, auditor sum up that to be a misstatement. Clear, yeah? A misstatement. But the misstatement is not so serious to render the whole financial statements to be adverse. It's only certain part. In majority, it's okay, but only certain part where it is not true and it is not fair. Yeah, so that explaining to you about the modified. Yeah. Right, this one, therefore we said just now, the audit report can be a modified audit report or the modified audit report. The unmodified audit report, a modified report with unmodified opinion standard. But there's one more thing here, yang ni sebenarnya yang ni. Now, this title is modified audit report. Audit report, audit opinion is two different things. Audit report, audit opinion is two different things. Audit opinion is written inside audit report. Is that clear? Audit opinion is within audit report. Audit report is actually, okay, when you prepare a report to me, let's say a report about certain activity, you are going to report activity 1, activity 2, activity 3, activity 4, blah, 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 right? But all this activity would be what? In one report. So, the audit report is actually the big thing, but the opinion is actually to be included in the audit report. So when we have unmodified audit report, we only have unmodified report with unmodified opinion, which is the standard unqualified opinion. And this is actually the example given in the ISA 700. Okay, for the modified audit report, we have that three just now lah, the three just now. The qualified opinion, adverse, disclaimer. But there's one more, unmodified opinion with emphasis of matter or other matter paragraph. So this one, this emphasis of matter and other matter paragraph is going to be included in the audit report. So that's why we say the audit report is modified. Yeah. So I hope you are clear with regard to that. Sekarang ni boleh nampak ke ni apa yang saya buat ni, saya tukar-tukar ni?
Boleh.
Okay. So just now the audit report is divided into two, the audit report. If let's say we categorize audit report by opinion. Oh saya saya tak nampak gelap ni. Sekejap eh. Ya nampak saya dalam gelap ya. Tak perasan tiba-tiba dia jadi gelap. Okay. So we can some textbook they divided the category by opinion. Just now I divide by category of report, yeah. So when we have the two categories of opinion, it would be unmodified opinion and modified opinion. What would come under unmodified opinion here? You can see this one here, yang tadi ya. Okay, this is the category modified audit report, modified audit report. So for unmodified audit report, we only have one. But for the modified audit report, we have actually four. 1, 2, 3, 4. Okay, if you divide the category into this unmodified opinion, modified opinion, then okay, this one would come under, yeah. And this one too. Would come under here. And these three would come under here. Faham tak ni? Do you understand? Okay. So you have to be very careful when you state your answer. What do you mean? Is it opinion or is it the report, audit report? Audit opinion, audit opinion, or the audit report? Yeah. Modified opinion, modified audit report. They are not the same thing. Eh? Boleh faham ke?
Yeah.
Ha? Nampak ke ni small?
Nampak madam.
Nampak eh? Okay. So that is actually because some lecturers, you know, they have by this unmodified opinion and modified opinion. So when you read the question, you have to be very careful what the question is all about. Is it asking about opinion or is it asking about the audit report? Okay. Back to this one here. So this one is actually to tell you about inilah the modified report with unmodified opinion. Modified report with unmodified opinion. So yang tadilah is actually referring to this. Huh? Okay, it's referring to this. Hmm. Okay, it's referring to this, yeah. So this one modified report with unmodified opinion. So it's actually referring to yang ni. Sorry lah, yeah. So it's actually referring to this, yeah. Okay, back to this one here. Audit report with emphasis of the matter. So audit report with emphasis of the matter. Sorry, pening you tengok sorry. So emphasis of the matter is actually where it's unmodified opinion, but it's just that auditor would like to highlight certain things here, yeah, to bring necessary to draw to the attention of the user. And this information has actually already disclosed or reported in the financial statement. Dah ada dalam financial statement tu. Tapi kalau tak highlight, nampak ke tak? Let's say important lah, saya kata you kena buat reason. You have to give reason. And okay, the statement I have also mentioned, you have to reason out. But then when you answer the question, you did not reason that out. So how to highlight that? So dalam soalan, ada soalan saya, kalau soalan saya akan buatkan dia bold, hitam dan saya akan underline. What does that mean? To draw to your attention lah, that you have to address that. Clear, everybody? So that is about emphasis of the matter. So it is actually reported in the financial statement, but it's just that sometimes user they are careless, they did not focus, so we need to highlight. Okay, what about the other matter paragraph? So the other matter paragraph is similar juga that auditor would like to highlight to the user. But the difference is that this information is not, you cannot find this information in the financial statement. Why? Because it doesn't relate to that year's financial statement, so it cannot be included. Okay, everybody? You cannot find the information for the other matter paragraph. You cannot find the information in the financial statement because that information does not relate to that year's financial statement. So therefore, this new piece of information need to be included in the audit report but under other matter paragraph. So you can see that this information necessary to communicate, yeah, other than those that are presented or disclosed in the financial statement. Yeah. And this is actually for user understanding, So where this is going to be reported, if the emphasis of the matter is going to be included after opinion paragraph. After opinion paragraph. So audit matter paragraph. Mana dia? Included after opinion paragraph. And if let's say there is emphasis of the matter, it should be after emphasis of the matter. So turutan dia would be opinion, emphasis of the matter, and then after that the emphasis of the matter, and then after that other matter paragraph. Okay, everybody? Modified report with modified opinion. I have actually explained to you just now about the categories. Qualified, can you see yang sebelah ni yang saya buat ni? Yeah. Okay, so the qualified opinion, adverse opinion, disclaimer of opinion, and you know the categories, the degree of seriousness. the degree of seriousness. Adverse opinion, that means auditor assume that the financial statements contain material misstatement which affect the true and fair view of the financial statement. And if it is not so serious, it's going to be under qualified opinion, where auditor conclude that financial statement has material misstatement, but does not affect the overall financial statements. Okay, for the disclaimer, management said that we do not have evidence, something like that lah. We do not have the evidence to form opinion about the financial statement. And that is actually serious. If not so serious, okay, auditor would say that the financial statement show a true and fair view in general. However, with regard to inventory, blah, blah, blah. So that means the inventory auditor cannot form the opinion. So this is actually telling you about this, yeah. All these are actually explaining what I have actually explained to you, yeah. This is the summary of what I have said to you just now. So please go through yourself, yeah. The rest of the slide, maybe you can read through, yeah. Read through yourself because I have actually mentioned everything here, yeah. Cuma the thing is the content lah. The content is actually not to say nothing. You still have to know, yeah, what would be the contents of the audit report, yeah. But this is actually first audit paper, so go back and revise, yeah, of this. When we talk about the contents here, you have to be very careful because don't refer to the old audit book or old text because the audit report contents title in the audit report has changed. We no longer has the scope paragraph. We only have the introductory paragraph, yeah. So the best would be, for you to go to the ISA. Read the ISA, refer to the ISA. Okay, this one is about the key audit matter. Saya tak tahulah. Saya macam, okay, Alhamdulillah. Semalam saya cuba buka ni tak dapat. This one is 705. This one is 706. Okay. So this one, okay, this one is the responsibility of auditor to give the opinion. So I think you have to be familiar with reading the ISA. Yeah. Okay. Okay. So you can see the standard here. This is about 700, yeah, standard. Standard dia ini je sebenarnya. Sorry, sampai sini. Yeah, paragraph. It's paragraph. It's not page, yeah. So tak banyak, sikit je actually. But burung nak masuk. Kejap. Ada tupai nak masuk rumah. Okay, right. As I said just now, these are actually the requirements, the standards. Yeah, the standard. These are actually the standard. Yang lain tu, these are actually the application. Application, it means what? These are example of situation where example of situation, and this can be used by auditor when the auditor have faced the situation. In other words, it can be example to you. So kalau you cannot understand, you just go through the A here because it provides you a lot of information. Yeah. So auditor's report to A13 until A72. See, A13 until 72. So basis of the opinion, blah blah blah. Okay, so that's about 700. What about the key audit matters here? Key audit matters. Same thing here. Yeah. So this is the requirement, the standard. See, only paragraph 9 until 18. So not that many. Yeah. So go through them. And the definition, the key audit matters definition. So if you would like to get the definition given by ISA, then you can refer to this. Determining, see the three areas just now? Yeah. Communicating, see these two just now? And they have given to you the reference. This is why you can look for example. Yeah. All right. The next one would be the ISA. Sorry. Modification to opinion. What is this? Modification to opinion. The modified, the qualified opinion, the adverse, sorry, sorry, okay. The qualified, the adverse, the disclaimer. So it's under ISA 705. Okay, so you can see that here issued and then updated. So sebelum ni 705, 706, 701, 701 tak ada lagi, tapi 706, 5 and 6 here is actually under here. But they have actually revised, so they have actually taken out this one modification to become 705, and then the emphasis of the method and other method they have taken out from 700 and bring and has own standard 706. Yeah? So if you are unlucky, if you just simply Google the ISA, you may get this one, and it's the old one. Okay, the 700, but the old version, the outdated one. So to get the latest ISA, you need to go to the Malaysian Institute website. So that's all for the audit report. Anything to ask? Anything to ask?